I'm excited to start a new 100K challenge. In my last video, I went over a few higher time frame trades I've taken lately. There are benefits to trading the 4-hour, but as you saw, some drawbacks as well. After holding the trade for weeks, it's easy to give back hundreds of pips on a minor retracement. The other thing is, even though I trade 28 pairs, I may only see one good setup a day. The temptation for many people is to get bored, take trades that don't fit into the plan. Instead of falling into this trap, I decided to start a 5-minute scalping challenge. It'll be a variety of setups, ranging from price action, Ichimoku, and ICT. Based on my comments, I know there's a hunger for action, the possibility of passing a prop challenge faster. More on the scalping strategy in a future video, but let's talk about what I look for when considering prop firms and why traders with edge may be a good option for you. No time limit has become the industry standard, and I'm grateful for the change. But believe it or not, you can still find firms under the old model. Run away from them as fast as you can. In this day and age, a time limit is a deal breaker for me. After I know there's no time limit, the very next thing I look for are independent reviews. I travel a good bit and stay in 50 hotel rooms a year. Before I book, I click on the 1 stars and then the 5 stars. What you'll quickly realize is some people just love to complain. I always scratch my head when someone gives a 1-star review because it rained all weekend or there's construction going on across the street. Look, I'm sorry your vacation was ruined, but what does that have to do with the hotel? Compare that to something legitimate like this. If $22 parking is the only thing wrong, I'd be annoyed, but I'm not getting on board with a disgusting room. The smell of mold and cigarettes, dirty beer bottles, dirty walls, bent mattress, stained carpet, noisy AC, and a toilet that doesn't even work. If true, this is 100% valid. I'd give it 0 stars if I could. We're going to look at the Trustpilot ratings for traders with edge. As you read them in the back of your mind, ask yourself if the trader's mad because it's his own fault, or if there's really something shady going on. Here's a 1-star review. Someone thinks it's ridiculous for losing the account for only a small loss. Support goes on to say the rules on an account are clearly laid out before you purchase an account. They're also in the dashboard. So while you may think it's a small loss, it clearly broke the rules. We'll go over the rules in a minute, but the terms are clearly spelled out. Why someone would pay money for something they have no idea what they're signing up for is beyond me. I'm sure not you, but maybe you've had a friend who tries to put furniture or an exercise bike together without reading the instructions. Ends up with a few extra nuts and bolts. Maybe you can get by with it there, but prop firms are a different ballgame. What's the max drawdown? Is the daily drawdown static or relative? By the end of the video, you'll know exactly what the deal is. Another 1-star review, a very generic, very bad company with very bad rules. Here's an echo of the first post. If they have very bad rules, why sign up for them in the first place? Don't blindly jump in and then blame somebody else. I didn't read a single review where someone said I passed phase 1, I passed phase 2, I was in profit on the live account and was never paid out. Now, let's take a look at the other side of the coin and hear how the experience has been for the majority of traders. Good support is nice to hear about, but the thing I'm most interested in is if people are getting their money. Eric got funded in September and in 2 months has already got 3 payouts. Amir has been trading with the company 8 months. He's already received 3 payouts and they always are on time. Abdul said he received his 2nd payout today without any stress. Another person said they received their 3rd payout from Traders with Edge. Traders with Edge offers 3 types of accounts. Turtle is the 1-step, Hare is the 2-step, and they also have an instant funding option. Once you see the trading time is unlimited, you want to pay close attention to the daily loss and max drawdown. As a general rule of thumb, I want at least 4 or 5% breathing room each day. Maybe you're different, but for me personally, I wouldn't feel comfortable with a daily loss of only 2.5%. The other issue I see is the max loss to profit ratio. I want the max loss to be at least as large as the profit target. We have to make 10%, but are only allowed to lose 5% overall. This falls below my 1-to-1 ratio, so for those reasons, the one phase challenge isn't something I'd personally take. So 1 down, 2 to go. Instant funding has been gaining popularity these days, so let's take a look at it next. Here there's no daily loss, just a max drawdown of 5%. You pay $2,000 for a $40,000 account. The target is 10% and your profit split is 50%. 10% of 40,000 is 4,000 and 50% split of the 4,000 is 2,000. So you might assume that your first payout would be the $2,000 profit and another $2,000 for your initial fee. It's important to understand the fee is non-refundable, so you would only get $2,000 back. If you think critically about it, essentially the instant challenge is really a one-step challenge wrapped up in different clothing. Let's compare the instant funding to the one phase we just looked at. The fee for the 40K instant is $2,000 and the one step is $750. If you hit 10% on either, you're at break even. Once that happens, you scale up to $160,000 on the instant, and you have your live 100K account from the one step. Take profit is 10%, and after the profit split, you make exactly the same amount from both, and you have an extra $8,000 in your bank account. The only difference is the instant is almost 3 times as expensive. I wouldn't choose either for reasons I mentioned a minute ago, but let's take a look at the standard 2-step, which I do think is a great option and one I would recommend. The Hair 2-step challenge offers 5% max daily loss, which is double the 2.5% from the 1-step, and with proper risk management, this should be plenty. And instead of the profit target being twice what the max loss is, here we're on equal footing with a max loss of 10% and a target of 10%. Leverage also jumps up from 20 to 1 to 50 to 1. Min days goes down from 10 to 5, and the price is $200 cheaper. So it's much better conditions all around. One thing people overlook, the goal is not really to get funded, but to receive payout after payout from the live account. Whatever the phase conditions are, those carry over to your live account. So under phase 1, even if you do manage to pass with 2.5% daily loss, that's going to stick with you for the life of the account. I don't know about you, but I'd rather do the work on the front end and have a much more sustainable 100K account. Once we pass phase 1, we're still allowed 10% max drawdown, but we only have to make 5% to graduate. You can use an EA as well as trade the news. All trades must be closed by the weekend. I'm on the 5-minute time frame, so not a big deal. Scrolling down, we see closing before the weekend is only a soft rule, meaning it won't cause you to lose your account. It's better if you're in control and close your trade when you think is best. But if your trade is still open at the end of the day on Friday, it'll automatically be closed at the current market price. The negative reviews we saw earlier are about the hard rules. There are 4 of them, and if you breach any of them, your account will be terminated. We'll take a look at each of them, starting with a daily drawdown. We already saw it was 5%, but 5% of what? On day 1, our account starts at 100K. 5% of 100K is 5K, so at no point during the day can our closed or open equity hit 95K. The daily drawdown is not always going to be the same, so let's take a look at a couple more examples. We have our live funded account and things are going great. We're 10K in profit. 5% of 110,000 is 5,500 instead of only 5,000. The amount we want to stay above is $104,500. On the other hand, you start the day with 97,000. You can only lose 4.8K, not 5,000 or 5,500. You have to stay above 92,200. Traders with Edge let you hold trades overnight, just not over the weekends with the standard account. The 3 previous examples were when we started the day without any open trades. Let's talk about how your daily drawdown changes if you roll over a position. My account is 100K and I'm risking 1%. By the end of the day, I'm up $6,000. Price is still in a strong trend, so don't see a reason to get out of the trade. I move stop to break even, and unfortunately price comes down and takes me out. Yesterday we started at 100K and today we end at 100K. Nothing lost, so no problem, right? Not so fast. Have to keep in mind our new daily balance starts at 5 p.m. Eastern. At that time our equity was 106K. Can only lose 5%, which is 5.3K. Have to stay above 100.7 thousand. Our stop loss is irrelevant at 6,000 because it's past our max daily drawdown. Our account would have been breached here. We hit our limit. At this point, your trade is closed and your account is terminated. Technically, you didn't lose money, but your equity decreased more than the $5,300 allowed. Instead of rolling over a profit, let's see what happens when I carry a loss. I start day 1 with 98,000 and at 5 p.m. I roll over a negative 2K trade. On day 2, my equity starts at 96,000. 5% of 96 is 4.8, which means I have to stay above 91.2K. I don't have a stop loss in place and my trade keeps crashing on me. I'm down another 4K today and $6,000 total. If by some miracle the trade shoots up to break even, this would not be a violation. I'd be at 98K again. The reason for this is because it all happened in the same day. Now, pay attention to the next part. Instead of going up or down, price hangs out in a range, and I roll the trade over again to the next day. Trade is down 6K. I started with 98, so my current equity is at 92,000. Max total drawdown is 90,000. So you might think our max daily drawdown today is 2,000, but that's not the case. Yesterday we rolled over a $2,000 loss, which was below the daily drawdown. Today we rolled over a $6,000 loss, which is more than the daily drawdown. As soon as the new day starts, we'd be in violation and lose our account. We just talked about the daily drawdown. What about the overall drawdown? Maximum drawdown is 10%. I'm starting with 100K, so at no point can my account ever get below 90,000. Let's say I get my account up to 109,000 in phase 1 and I've almost passed. I go on a brutal losing streak and lose $2,000 every single day. My daily drawdown is around 5,000, so I'd be safe as far as that's concerned. But I can't keep losing forever. On day 10, I'd hit the floor of my account equity and it would be game over. We just covered the daily and max drawdown hard rules. Not hard to understand, but let me know in the comments if it's not crystal clear to you. Now let's look at the minimum time rule. Traders with Edge wants you to show you can actually trade and not just gamble on a news event and get lucky. You have to execute a trade on at least 5 separate trading days to pass. If you hit 10% on your first trade, you can't just play 0.1 lots the next 4 days. One of the rules under no manipulation says the trades that help you pass have to be within 5 times the size of each other. If you trade 5 lots the first time, you have to trade at least 1 lot per trade over 4 more days. Other restrictions include no tick scalping, no arbitrage, no hedging between accounts, and no copying others' trades. This is all pretty standard language across most prop firms, but something you should be aware of. I can't stress how important it is to actually understand what you're signing up for. So it's time for a pop quiz. Unless you get 100%, go back and re-watch this video or read the rules on the Traders with Edge website. Question 1. You buy a 100K challenge and start the day with 103,000. What's your min equity today? You can lose up to 5%, so $97,850. Question 2. You start the day with 103,000 and no open positions. At lunch, you have the following trades open with all stops at break even. Plus 2,500, plus 2,000, plus 1,000, and plus 3,000. What's your current equity? $111,500. So we're sitting at $111,500. Just after lunch, news comes out. Prices crash and all of our trades closed at break even. Equity dropped $8.5 thousand, which is more than the $5,000 total we saw before. Would our account be in violation? No, the minimum daily equity is based on the start of the day, not a trailing amount from the high of the day. Our minimum daily equity is $97,850. We're back to $103,000. Question 3. We have a $100,000 account. Starting balance today is $92,000. 5% of $92,000 is $4,600. Today we only lose $3,000. Would this be a violation? Yes. The max total drawdown is $90,000. We went below this, so we did breach the account. We have a $100,000 account. What's the equity we need to pass phase 1? Phase 1 profit target is 10%, so our account has to hit $110,000. We bought a $100,000 account yesterday. We need $110,000 to pass phase 1. Yesterday we made $6,000, today we made $5,000. Have we passed phase 1? Not yet. There's a 5-day minimum trading period with proper sizing. Which of the following are not allowed? Opening and closing trades within 30 seconds, which is tick scalping, using a signal service, using an expert advisor, arbitrage, news trading, hedging between accounts. Using EAs and news trading are allowed. Everything else is against the rules. We passed phase 1. What's the equity we need to pass phase 2 in order to receive the funded $100,000 account? Phase 2 profit target is 5%, so we need our closed equity to be $105,000. When does the new trading day start? 5 p.m. Eastern Standard Time. You have 2 open trades on Friday at 5 p.m. Eastern Standard Time that you forgot to close. Weekend holding is not allowed. Would you lose your account? No, this is only a soft rule. They'll be closed for you at market price. 100K account, starting balance is $93,000. What is the max loss today? Remember, the max total drawdown is $90,000, so you have to stay above this amount. With trading, there's no shortcut or free lunch. The one-step or instant look enticing, but they come with higher costs and restrictive rules. But when it comes to the standard two-step, I think it's a great option to try. Hopefully you can see there's no mystery to the rules. The boundaries are more than fair. Stay within them, and Traders with Edge has a stellar reputation and will pay out your profits. I want to switch gears for a minute and talk about who should and who should not take a prop challenge. Think about the name, Traders with Edge. What does an edge mean to you? I don't care if you trade price action, ICT, or use your favorite indicator. There are hundreds of styles that are profitable. But what is your edge? Do you have a written trading plan? In other videos, I've shown you the backtest results of thousands of trades. I've shared with you exactly what factors must line up for me to give me an entry signal, and I know specifically what'll trigger me to exit. It's not good enough for me to say, well, I'll know it when I see it. Your strategy should be so crystal clear that if you gave me your rules, I should be able to backtest it and we should get similar results. Do you know what win rate to expect? How about your average risk to reward ratio that's typical over a few hundred trades? I'd say a profitable strategy is a prerequisite, but not enough to have an edge. In my other videos, it always seems like I'm coming back to risk management and psychology. This is where a trader's edge really comes from. If you go through the statistics, most people fail prop challenges lose not due to the total max loss, but because of the daily drawdown. There's really no excuse to lose 5% in a day. If I risk 0.5%, what's the chance I even find 10 good setups in a day, let alone lose every one of them? Or spread over time, I have to lose my first 22 trades in a row to blow my account. There are plenty of free tools to calculate your lot size for you. I tell the EA I only want to risk 0.5%. Click a couple buttons and it calculates the lot size for me. I go over exactly how to use it in this video. When I first started to learn about trading, I'd always hear the rule of never risking more than 2% on a trade. This was back before prop firms really came on the scene. Now it's a mistake to say I bought a 100K account so I can risk 2%, which is $2,000. Since you have a max drawdown of 10%, in reality, you have a $10,000 account. If you're risking $2,000 on a trade, 2,000 of 10,000, realize you're risking 20% of your available balance, not 2%. Number one problem I see is people risking too much. Second problem is being emotional. Revenge trading when you take a loss, or you're not on the charts when your perfect setup happens. You fear missing out and chase price instead of sticking with your trading plan. When it comes to a stop loss, two biggest killers are only using a mental stop loss or moving it farther away as price gets close to taking you out. Another piece of advice I hope you take to heart is never add to a losing position. Just take your loss and live to fight another day. Prop firms are not get-rich-quick schemes. They are for traders who already have a proven strategy, a strong mindset, and the psychology to support it. If you feel you're ready, check out the link in the description below to check out Traders with Edge. In the meantime, I have a video where I go over 5 steps to pass prop challenges. Thanks for watching. Talk to you soon.